Burkina Faso, a nation increasingly asserting its sovereignty and control over its vast natural resources, has recently electrified its mining sector with a monumental development. Perenti, a global leader in mining services, has secured a staggering 1.1 billion Australian dollars, approximately $707 million US contract. This isn't merely a business transaction, it's a profound declaration of intent, set to dramatically reshape not only gold extraction in one of West Africa's richest mineral belts, but also the broader narrative of resource governance across the African continent. This deep dive will unravel the multifaceted implications of this game-changing deal for Burkina Faso's economy, the global gold market, and Perenti's evolving footprint in Africa, examining how local job creation intertwines with international market shifts and a rising African force in the mining world. A landmark contract for a nation on the rise. The core of this transformative shift lies in Perenti's blockbuster win. In early June 2025, the Australian mining powerhouse, operating through its joint venture African Underground Mining Services Burkina Faso SARL, EUMES, formally clinched a massive 5-year contract. This agreement, valued at approximately $707 million USD, a $1.1 billion, focuses on managing underground operations at the Mana complex, specifically targeting the high-grade Su and Wana deposits within the prolific Hound Greenstone Belt. Perenti's presence in the region is not new. EUMES has been delivering underground mining and related support services at Mana since 2018, consistently demonstrating strong operational results. However, this expanded scope, effective from June 1, 2025, marks a dramatic acceleration in Burkina Faso's gold output ambitions. The Mana mine, which produced nearly 150,000 ounces of gold in 2024, is projected to boost its output to an impressive 160,000 to 180,000 ounces in 2025. With current gold prices hovering around $3,300 per ounce, this increased production represents a potential windfall of hundreds of millions of dollars in annual revenue. President Traoré's vision. Resource control as a national imperative. What truly elevates this commercial achievement into a national power move is its seamless alignment with President Ibrahim Traoré's audacious vision for Burkina Faso. Under his resolute guidance, the nation is aggressively asserting stronger control over its natural resources, a fundamental shift from previous models where foreign entities often dictated terms and extracted immense wealth with limited tangible benefits flowing back to the local populace. Traoré's leadership has been unapologetically bold. He has moved to suspend artisanal gold export permits to curb smuggling, spearheaded the construction of the nation's first domestic gold refinery to retain value onshore, and even nationalized underperforming foreign-held mines to reclaim strategic control. The Perenti joint venture, crucially, is not an isolated incident but a continuation and elevation of this overarching blueprint. By embedding Burkinabe stakeholders and talent directly into one of its most valuable gold assets, the deal signals a profound shift from foreign-dominated extraction to homegrown participation and ownership. A key detail underscoring this commitment is the 10% stake held by local partner Dynamic Mining Supply SARL in the joint venture. This inclusion reflects President Traoré's unwavering push for domestic empowerment within the mining sector, moving beyond mere symbolism to structural involvement. A strategic time for gold and sovereignty. The timing of this resource realignment couldn't be more strategic. Global demand for responsibly sourced gold is intensifying, and Burkina Faso, sitting on the prolific Hound Greenstone Belt, is positioning itself as a credible and ethical supplier. Moreover, the gold market itself is experiencing a significant surge. Gold prices have witnessed a remarkable increase in 2025, with some analysts forecasting the price to hit substantial figures per kilogram by year-end. Captain Traoré is evidently taking full advantage of these market dynamics. His administration has actively pursued a strategy of reclaiming national wealth. Since August of last year, the government has embarked on a systematic sweep, targeting and taking over 5 mining companies as of June 12, 2025. This includes fully nationalizing 2 operational mines, Wagnion Gold SA and Samafu Bongo SA, where Burkina Faso previously held only a 10% ownership stake, now owning 100%. Furthermore, exploration licenses for 3 other companies have been cancelled and their assets absorbed by the state. This assertive stance marks a clear departure from past practices, signaling to the world that the era of simply shipping raw or out of the country is over. Nation building through resource management. Under Traoré's guidance, The state is leveraging this heightened demand and increased control to negotiate stronger stakes in production. The objective is clear: to reinvest earnings into critical national infrastructure and to empower a new generation of Burkinabe engineers and technicians capable of managing high-tech underground systems. Even environmental considerations are woven into this new paradigm. A memorandum of understanding with Sandvik for the deployment of diesel-electric vehicle fleets underground demonstrates a commitment to marrying output with sustainability, aiming for cleaner, more efficient operations. This isn't just a business deal. It's a blueprint for nation-building, transforming Burkina Faso from a raw exporter to an industrializer, meticulously crafting its own narrative of autonomy and national dignity. Flipping the dynamic, from exploitation to empowerment for decades, foreign mining companies often called the shots in Burkina Faso, extracting vast mineral wealth while local communities were left with environmental scars and unfulfilled promises. Traoré's leadership has decisively flipped this dynamic. Through aggressive contract renegotiations, strategic nationalizations, and resource-driven diplomacy, he is actively redirecting the flow of wealth back into Burkinabe hands. The Mana Complex expansion, facilitated by the Perenti contract, serves as a prominent showcase of this strategy in action. Traoré's bold and strategic moves extend beyond the mining sector. He notably expelled French forces, reducing foreign military dependency, and has welcomed new international players like Russia and Turkey, but always on terms that explicitly retain national sovereignty. A pivotal step in this transformation was the approval of Burkina Faso's first domestic gold refinery in November 2023. This monumental achievement signals a deep commitment to value addition at home. Coupled with the Perenti expansion at Su and Wana, this signifies a broader transformation, not just about extracting more gold, but about refining, regulating, and reinvesting gold profits within national borders. Dynamic Mining Supply's mandated involvement in the Perenti joint venture reflects Traoré's unwavering insistence on local workforce development, making it a structural, not merely symbolic imperative. With gold production projected to reach 180,000 ounces in 2025, royalty flows to the government are expected to spike. This, combined with Traoré's extended transition period through 2029, provides a crucial window to solidify and entrench these transformative reforms. Burkina Faso is emerging as a nation no longer content to be mined and marginalized. Traoré is engineering an economic realignment, forging a future where the country owns its resources, its expertise, and fundamentally, its destiny. The numbers tell a powerful story. A closer look at the financial projections amplifies the significance of this shift. The Mana Complex's production of roughly 150,000 ounces of gold in 2024 is set to increase to between 160,000 and 180,000 ounces in 2025, with gold prices currently around $3,300 per ounce. This translates to annual revenue from this single operation alone ranging from $528 million to $594 million. However, this is merely the surface. Once royalty payments, domestic refining margins, and increased local procurement spending are factored in, Burkina Faso could realistically net over $600 million annually from the Mana site. This constitutes a substantial economic surge, representing nearly 3% to 4% of the country's GDP, with profound and lasting implications for national development and financial independence. From Perenti's perspective, the deal also brings solid numbers. This expanded Mana contract is expected to significantly boost their earnings into fiscal year 2026 and fits well within their fiscal year 2025 revenue guidance of between $3.4 billion and $3.6 billion. For shareholders, this contract promises reliable performance in a sector often prone to volatility. But for Burkina Faso, the win is strategically far more significant. With the country's first gold refinery operational, the government can capture added value at every step, from raw extraction to final processing, jobs, skills, and shared prosperity. What truly makes the Perenti contract transformative goes beyond its dollar value. It's the direct impact on people's lives. Under President Traoré's leadership, Burkina Faso is prioritizing inclusive, bottom-up economic growth, and this deal is a direct reflection of that ethos. The joint venture structure explicitly including Dynamic Mining Supply (SARL) as a local partner, ensures that Burkinabe businesses and workers have genuine equity and opportunity in the nation's burgeoning gold industry. AUMS's expanded presence at Mana will translate into hundreds of new technical positions and potentially thousands of indirect jobs across various sectors, including logistics, catering, transport, and equipment services. Crucially, the training programs linked to this contract are designed to go beyond basic labor. Initiatives such as advanced underground drilling and the maintenance of next-generation diesel-electric mining vehicles, supplied through Sandvik, are aimed at upskilling the local workforce for long-term participation in high-tech mining operations. This aligns seamlessly with Traoré's broader national agenda, which includes formalizing artisanal mining, cracking down on illegal exports, and boosting domestic gold processing through the new refinery. The benefits radiate beyond the mine gates. As underground output increases, secondary markets around the Hound Belt, including hospitality, supply chains, and local retail, are expected to experience measurable growth. Traoré's administration is already committed to redirecting increased mining revenues into essential public services such as nutrition, education, healthcare, and infrastructure. The 5-year structure of the deal provides stability and planning capacity for communities, ensuring that unlike past resource cycles often marred by volatility, this contract is built for sustained, shared prosperity, fostering real generational change. Sustainability and tech upgrades. A modern mining model in today's global landscape, a responsible mining deal is fundamentally about sustainable, technology-driven operations. The Perenti JV's inclusion of an MOU with Sandvik to deploy diesel-electric loaders and trucks underground signifies a progressive step, aiming to reduce emissions and deliver cleaner, more cost-effective operations. Burkina Faso's government, under Traoré, actively supports this shift. The approval of the country's first gold refinery in 2023 was a clear signal of a pivot towards adding commodity value domestically. Concurrently, policies like the export ban on artisanal gold and tighter mining codes are clamping down on illicit practices, resulting in a cleaner, more transparent sector that generates revenue within the legal economy. By embracing industry benchmarks like these, Burkina Faso is positioning itself ahead of competitors who might still rely on older, emission-heavy fleets. Cleaner operations mean lower energy costs, reduced environmental impact, and a stronger global brand, crucial for attracting premium, ESG-focused investment pools. Thanks to Traoré's policy platforms, Burkina Faso is not only digging gold but also cultivating a reputation as a responsible and forward-thinking mining nation. As global finance increasingly gravitates towards sustainable supply chains, Mana's operations could well serve as a model for African-led responsible mining, scalable across the continent with Traoré's continued support. This truly represents a win-win scenario that modern resource economies aspire to. Regional influence and strategic positioning. This contract's significance extends beyond Burkina Faso's borders, sending ripples throughout the Sahel region and beyond. President Ibrahim Traoré's leadership is fundamentally reshaping how military-led West African governments engage with foreign partners. Burkina Faso, under his navigation, has been a key architect of the Alliance of Sahel States, AES, alongside Mali and Niger. A clear assertion of independence from lingering French influence and a move towards greater regional self-determination. The Mana deal further reinforces Burkina Faso's capacity to negotiate hard in the complex geopolitical arena. Perenti's long-term presence signals both stability and a safe operating climate, even amidst ongoing regional security concerns. Traoré's government, despite facing a tripling of insurgent-related deaths post-coup, is slowly but surely regaining territory and control over resource zones. By anchoring global capital in local industries, he strengthens revenue streams crucial for ramping up security and essential public services. Moreover, successful partnerships with globally recognized companies like Perenti and Sandvik provide Burkina Faso with significant leverage when courting future foreign investment. It signals to investors that the nation is capable of managing major extraction contracts without succumbing to exploitative traps. This strengthens the country's reputation, potentially unlocking new investments in mining, agro-processing, and critical infrastructure. More importantly, it marks a profound shift in regional dynamics, moving away from outdated colonial frameworks toward African-centered governance and economic agency. It is a clear and decisive step toward the self-determined, sovereign future that Ibrahim Traoré is determined to build. Next steps in the grand vision. As Perenti's operations at Mana ramp up in June 2025, Burkina Faso enters a critical phase. Under Ibrahim Traoré's leadership, the government must now rigorously ensure that local procurement levels continue to rise, that the gold refinery construction accelerates on schedule, and that tax and regulatory frameworks remain transparent and robust. The persistent challenge of fragile security cannot be overstated. While death tolls from insurgency have unfortunately tripled post-coup, the increased state revenues from gold, if managed effectively, offer the potential to finance a larger military modernization effort in crucial rural reconstruction. The 5-year timeline of the Perenti deal offers a significant window to firmly entrench new industrial norms, robust local training, the integration of cleaner technologies, and consistent revenue growth. It also provides Burkina Faso with valuable time to solidify alliances across the Sahel via the AES and to strategically reshape its role in global gold supply chain conversations. The anticipated 160,000 to 180,000 ounces of gold output in 2025 at current market prices projects future revenue between $528 million and $594 million, sufficient to measurably shift national economic indicators. Increased government budget allocations tied to mining operations have the potential to significantly elevate investment in education, infrastructure, and public health. Furthermore, if Traoré can maintain stability and adhere to the extended transition period through 2029, with elections scheduled no earlier than that year, continued economic wins will be vital for bolstering his political legitimacy. The Mana Complex, staffed by a powerful partnership of global expertise and local empowerment, is poised to become the flagship of Traoré's envisioned Sahelian Renaissance. This is more than mere mining, it's the tangible manifestation of his leadership, actively rewriting not just Burkina Faso's economic record, but its very destiny. In essence, the $707 million gold mining contract with Perenti planting its flag firmly in Burkina Faso soil is far more than a contract. It's a powerful signal to the world that this West African nation is not only open for business and rich with opportunity, but is also rapidly ascending on the global mining stage, driven by a new paradigm of resource control and national self-determination. This is a story where numbers meet real-world impact, and billion-dollar moves reshape nations, demanding attention from anyone tracking global markets, African development, or high-stakes business transformations.